following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, this hour, 11 o'clock Eastern Time. And let's go straight to the numbers. The Dow's up 84 at 18,660. The S&P is up 8 at 2192. The Comp Index is up 31 at 5,264. The VIX is up 9 cents. This is already interesting. VIX is up, finally, at 1164, up 9 cents. So this is going to be, let me view the VIX. There it is. So the VIX bounced a little bit. It went all the way to 1217. It's come back down. It's under the 9-period exponential moving average. This is a very important period for the VIX. Why? Historically, you can see this is the daily chart. This is the weekly chart. And it's under the 1250 low, under the 1280 low, 1250 from April, 1280 from, I believe it was October of last year. And in the monthly chart, you can see it's starting to test levels that it hasn't seen for a long time. What does that mean? It means that there's buying pressure if the VIX starts to pull back under each level from the day before. And it means that if it starts to rise, that it's selling pressure in the market. Buying pressure in the market if the VIX rallies, selling pressure in the market if the VIX declines. Selling pressure in the market if the VIX, selling pressure in the market if the VIX rallies, and buying pressure if it declines. I thought I said that. Okay. So right now it's up 9 cents. The Dow had a nice little move. It did a little double top. We were looking at the futures. I actually did the show with Tommy just a moment ago, the binary hour, and we were looking at the Dow. I think this is the one, INDU, and we were looking at it for at least test the previous high. Where did I put that chart? I guess I didn't put the chart here. Oh, it was the futures. YMU 16, there it is. And what happened, it did an exact double top. It went peak C1 right there at 18,623, and it came back under the 9-period moving average briefly and then popped up and retested exactly at the level 18,623. Now, there is still some buying pressure because that VIX is still low. So we're going to be watching this really closely. Let me do a couple of things here. Let me just finish the numbers. We've got the IWM. It was up sharply earlier. It's up 1.20 at 123.9039. Alternate count G/B in the daily, leg D in the weekly, leg A, brand new A maybe in the monthly chart. The QQQ series 123. That is the NDX 100. Alternate count G/C at 106. It broke the previous high. So this is now leg D. So we're getting to a point in almost all the charts where the upside should become a little bit limited. The downside just at first should be limited, and then I think we pull back a little deeper. This is not the very big, deep pullback that I think is coming up just yet. We'll see. In the meantime, back at the ranch, if you look at, let me just go to the gold. See, gold is up $3.60 at 1346.79, but it's really just stuck in this range. And the weekly chart's holding beautifully, just like the commodity index, TRCCI. This is the Reuters commodity index. Is up a bit today, up 293 at 422.31. But most importantly, it too is having a high level consolidation. And the monthly chart, I'll be discussing this tomorrow in my webinar, which is use these. I wanted to use these. You couldn't really see them before, so I've taken them aside to show that there could be a one-to-one relationship that occurred. That is, A to B equals C to D, nothing to do with Chapman wave peaks. In fact, the last peak was a trough E, and we had a spectacular move, as we've had in commodities before. Single leg A to the upside, and then the previous one was A to B, and then a very sharp move up. So this goes into the category, but until the commodity index breaks this downtrend line and starts to trade in the 480s, and right now it's at the 420s. That's a long way to go. Commodities could be in this bouncing area, just nice percentage moves, but nothing yet spectacular in terms of what one would like to see for a much deeper and longer, not deeper in a down move, longer and sustained. That's what I want to say. A longer and sustained up move. And if we go to the TLT, which is the Lehman 20-year T-bond fund, it's in this trading range. All of these, the dollar, everything is in the trading range. I suspect that this time next week, we will have broken the trading range in many of these indexes, maybe start a new trading range. For the dollar, it would need to go above 96.50 to really start a move to the upside, but it's stuck right now. And if it closes under 95, be careful because it could go down to the 94s. That should help gold, but the interesting thing is that there's not been a direct relationship in a counterpoint move, which is what you usually find where gold goes up and the dollar goes down. That hasn't been the case. Look at crude oil, CL. Crude oil right now trading at 45.60, up $1.10. Very sharp move, broke the resistance point. This is exactly what I had spoken about last week, that if there was going to be a move in crude oil, there's no time to waste. They can't hang around sideways. It's got to break out, and it's got to get above this entire conglomerate of resistance points between 47.40 and 47.63. A close above that says, okay, the next big resistance is 48.06, the 200-period exponential moving average. So I'll be talking about all these different things tomorrow night. This is probably one of the most comprehensive webinars that I've put together. It's probably, I'm thinking it's probably one of the most important webinars that I've given in a very long time. Right there, new highs to come, a 90-minute live event with Basil Chapman, August the 16th, 6 o'clock to 7:30 for subscribers. And what's really important about this is that within the context of the waveform, the Chapman wave, we broke out. And I actually scheduled this webinar before I knew that we'd be breaking out. And we've broken out to new all-time highs in the Dow. To me, that is extremely important. Let me show you why. Because in the Chapman wave methodology, I wonder if I can even find it quickly here. Let me go to that. Is a break coming up? Yeah, break's coming up. That's fine. So as we go to the break, what I wanted to show you is, if I can find it, I did so many charts and I did so much work. There, no, it's gone. Did I get rid of it? Surely I didn't get rid of it. I can't find it. All right, I'll have to look for that chart during the break. See if I can find it. It's just to show you the Chapman wave methodology, the easy aspect, which is to count each successively higher bar, each peak until you get to the fourth highest peak. So look at this. This is the Dow. We'll make it easy in this regard. You can see that the Dow is in leg C to the upside. I'm going to talk about this pattern that I call the Chapman wave stalk leg formation. What's the implication once you break the body? In this case, the high of May of 2015 at 18,351. And you break out, that's the neck. What happens after the neck is completed? Whole bunch of things like that. I'll be back. Basil Chapman, Tiger Technicians Hour. Love to hear from you. And I'll try to find that chart to make it real easy to identify the lowest low bar and really count each successively higher peak to peak D. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. I'm not sure why I'm having a little problem here. What's going on? All right, there it is. We'll do that. Just make it a little bit lower. Okay, we're back and we're looking at if I can get this right. I've never had that problem before. All right, it's disappearing. So I was just going to make it easy for you to identify. Oh, there it is. Come back. There you go. All right. So what we're looking at is the Chapman Wave methodology in play right now. And I'm going to try to get that to move. Can't get it to move. There it is. Oh, why would it disappear? All right. Not fair. We just want you to act reasonably. Lines that I'm drawing. Okay. We've got the Dow up 86 at 18,662. I'll come back to it. I was just going to do, there it is. Okay, Chapman Wave methodology, you identify the lowest low bar. You merely put an up arrow at that point. Usually I start with a plus sign. As soon as I take out leg A going to peak A and I go to B, so if it's strong, I can put an up arrow in. And that says there's a buy signal that's probably going to go to a buy mode, meaning you're going to go to at least 4 higher peaks. That's the objective. And at the 4th highest peak, that's where other things can happen. And look, we've just had an example. There's a particular technique in the Chapman Wave, especially when you're using 25-cent increments and not pennies or 0.01, where you can go to a peak C1 and then a peak C2 at exactly the same price, or just a tad under it. And that essentially gives you that peak D. So this is what we're looking at here. Identify the lowest low bar. Go to a peak A, pull back. You must not break the original starting point. If you do, even by 1 penny, it negates it. You have to start over again to find a low point that you can start a buy signal to buy mode. Then you count each successively high peak. This is called a floating letter until it actually makes a peak. And it should go to at least a D. The D is the 4th highest peak. Other things can happen at peak D. And that's the reason why we're somewhat cautious. Let me get rid of this right now. We went somewhat cautious right there on Friday because our long position went to that leg D in the Dow, IND, and in this particular instance, at 18,623, it went above peak C, and that started D. So got a little cautious there, and that's where we are right now. It did go a tad higher today. It went to 18,668, just 30 points higher. No big deal yet. But if this MACD crosses positively and the stochastic holds in this 86 to 88 area, that's going to be a big deal. That's going to say any pullback would be a buying opportunity and you could go higher. So this is a very important week, especially come Wednesday when the Fed says whatever they're going to say. But most importantly, you can see that the weekly chart is bumping into resistance in leg E, and the monthly chart is broken out in leg C. The MACD, there's 2 weeks to go. Anything can happen. If you turn down and the market goes down 200 points from here, that MACD will deflect back down negatively. Right there, the green line has crossed the red line, and the stochastic is acting very well. Stochastic right now is at 87%. So I'm anticipating we're close to some kind of a pullback. I don't know if it makes peak C because you need 2 months. In other words, we'd have to have the whole of September not to make a high above whatever the peak is in August to be able to confirm that that's a peak C. And if it only pulls back 17,885, that's 80 points. If it only pulls back to the 9-period exponential moving average and then starts up again, that's very positive. If you're looking at the S&P, SPX.X, look at this. S&P is only in leg B. The QQQ series monthly chart is in leg B. The New York Stock Exchange, you know, Larry always talks about, Larry President always talks about the New York Stock Exchange because historically, he and I have been in the markets a long time. We like to look at the old guard, and the old guard is really the New York Stock Exchange is I would not say that it's as big as the NASDAQ in terms of its efficacy, in terms of its, because the NASDAQ has the sexy stocks and the stocks that are going from 1 billion to 50 billion and then 100 billion, whatever it is. Those are the real big ones, and the New York Stock Exchange stocks, they're not in that category. So, but they are the old, they're the ones that have history behind them, and then most of them in the New York Stock Exchange. And that's in the leg B, but way under the all-time high. My suspicion is that the New York Stock Exchange will make an all-time high, and that's when we're going to be really, really careful. And we'll see. Okay, that's just my thinking. That's what I'm going to be discussing tomorrow night. I'm going to be discussing crude oil, the implications, socioeconomic, political, etc. of crude oil, where I think it's going. We'll be discussing housing market, the indexes themselves. It's going to be really a complete, and what is it? It is a webinar that is for subscribers. You can become a subscriber free by signing up for a month free, that is, and get the webinar. The webinar you can replay over and over for 30 days on your homepage. I think it's if ever there was an opportunity now to be looking at the longer term, this is going to be it. Question in the den about BIIB and AMC. We'll look at them. See, BIIB is Biogen Idec Pharmaceuticals. It's kind of stuck right now. And I would just say it's holding the 9-period moving average. If it was going to make that, what I call the inside rectangle from that peak E top in the daily, it really has no choice. Today or tomorrow, it should have been already today. It should be well above the high of the 11th, 316.25. It's at 313.72. It's running out of time. Otherwise, this chart looks just like GE. Look at this chart right here. Keep your eye on the left side. It's the daily. Look at this chart coming up. It's got a lot of the look of GE about it, in that it made that peak. This, of course, pulled back much, much sharper, but it hasn't been able to rally over the last 2 weeks. That's not a good sign. If I look at the BIB, which is the 2 times long, the biotechs, it is doing much better. C, D. Let me just go to the IBB. It's no use going to another trading view. Yeah, the IBB, a nice move up. It's a 295.58. A high today is 295.78. I suspect that we're going to get a lot of evidence about this coming month with the biotechs and the semiconductors. If they continue running for the rest of the week, that's going to be a big thing. If they turn around today, or not today, Tuesday or Wednesday, that's going to be a big thing, because this is that right shoulder failure pattern you see in the Chapman wave. If it fails here, the IBB, Otherwise, if it goes to 297.5, 298.5, there's a good chance it's going to try for the all-time high. No, sorry, I didn't mean the all-time high. The all-time high was up at 400. This is at 299. I'm going to retest the high that was made on the 4th of August at 299.48. But this is going to be breaking the H pattern that goes to an M pattern. If it takes out this, I have to consider that it's not an F. It is a brand new leg B to the upside. If it takes out 299.48 this week, the IBB, keep your eye on it because it's also very important because it's part of the QQQs, which are acting very well in leg D now, recycled higher in the daily. Hey, that's not a bad chart. Up 73 cents at 117.93. So we're going to be looking at that in a potential huge Fibonacci ABC up, may trough C on the way down. Yeah. Frank in Gloucester, let me look at the BIIB, Biogen IDEC, in relation to what you're discussing now. It's a good point to make, but there are other patterns that I think that might supersede it. Basil Chapman, Tiger Technicians Hour. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and Dow's just stuck there at that 87 plus 87 range. So the BIIB, Biogen IDEC Biopharma, trading down 64 cents at 313.30. I think this represents the overbought situation in the biotechs and Biogen IDEC and so many of the pharmaceuticals and so many of the companies that are European-based have become Cambridge-based, Kendall Square actually, based here in Massachusetts, right by near MIT. I mean, the buildings that have gone up are unbelievable. They are fancy and very expensive, and the properties, the prices they pay, very, very high. I think that there's a problem. So I'm just going to say that within the context of looking at the biotech, the IBB itself, and looking at, and let me just put the BBH right here, the BBH, which is the S&P. I don't know if I've updated it. That's C right there. That's D and that's E. Yeah, that's had a little bit of a pullback. A slightly different chart, no, not much, just a slightly different chart to the IBB. BBH is the S&P market, and this is the market vector, sorry, biotech ETF. Yeah, it actually is a little bit different. You see, within the context of these patterns, let me go back to the BIB, which is Biogen IDEC. Within the context of these patterns, the dailies look quite good. The weeklies are matching. Oh, of course it's matching. I've got the wrong one. BIB. There it is. That's the one I want to look at. What I wanted to say is that the daily looks a little bit the same because they've all had the same move. The weekly of Biogen IDEC is not good because it broke to a lower low. It had a spectacular move from 220 something to the 338 area, and now it's at 313 in a single leg move up. I'm watching this one real closely. It's a little bit different in that if my contention that the biotechs have made major tops, I mean major tops, and can have counter-trend big rallies, but counter-trend rallies nevertheless. But the biotech IBB is going to a lower low. This is my contention. I'll talk about it tomorrow night. And the BBH is going to a lower low. Then this represents exactly what I'm talking about. No move up over the 9-period exponential moving average in the monthly. 480 was the high. The low is 223. Massive move down over a 53% pullback. Then it has a big move up percentage terms. That is big, but I don't think it's going to hold. That's my belief right now based on the technicals. I think there's a lot more testing to do. So is this now? The question is, where would I do an Elliott wave? You know, it's much easier. Now I can go back to the IBB because that's an easier one to do. That has gone in Elliott wave. This is my interpretation, of course. 1 right there. Let me just change that. I like to get this to be nice and big. So we give it an 18 and a pink. That's usually the color I give to the Elliott wave. Pink, click, and a click. There we go. So that's 1. This is 2. And I'll tell you what this is if you're listening and you're not looking. And this is 3. And this is going for 4. And there should still be 5 to go. So Elliott wave, the simplest way of looking at it is that there are 5 waves. The 5th wave can sometimes be the most extensive to the downside. When it's complete, then there could be a really good counter trend move, or it could even be a brand new start to an up move. However, I'm looking at this and I'm saying, if 400.79 on the 20th, on July of 2015 was the high, the major high for this period, then what we'd be looking at is the 284 low of the very next month, August, with a bounce to peak A minus, which is there, December of 2015 at 343.87. You had your leg 3 down, but 3 usually has to be bigger than 1 in Elliott wave. I'm not that strict. It's the patterns that I look for. So I'm considering that this 3 to 240.03, the low of the February of 2015, and the leg we're in now is 4. I suspect when 4 is done and we start down, it not only takes out 240.03, my target for a long time has been right there, the 207.48 low of April of 2014. So my target has been for ages 220 to 190. That's the area, but the actual price is this left side low right there. And we'll see what happens. I could do a left side, right side price time, which I don't want to take time now. I just want to discuss that. I'll be talking about it in much more detail tomorrow night, what to do, how to do it, etc. Now let's do this. We want to go to there was a question about AMC. You know what, AMC, I'm just going to say that at this particular point, because it's kind of stuck in a range, AMC is AMC Entertainment Inc., trading at 29.73, down 7 cents. Nice move in the daily. My suspicion is the big test comes at 29.73 right now. The big test comes between 29.20 and 28.70. If it pulls back there and then takes that out, that would be a negative. It's going to take a longer time to get to a D in the weekly. If it holds 29.30s as key support, but in fact goes to 30.25 or 30.33 by Thursday of this week, that's suggesting it's going to make leg D in this move now to the high of July the 15th, the week of the 15th, at 31.42 to go to 31.43 or higher for leg D. And that will extend, if it's this month, it'll extend the monthly. Now, the fact that it's gone to a peak A, B, C in such a short period of time, after such a big move as a new IPO back in December of 2013 with a low of 1881 and a high of 36.13, a double, and then a pullback to almost give back just about all the gains to 1928. And now it's starting, this is the real move. And if it's going to go to a D, it should not break below the low that was made of 27.36 the week of the 5th of August. Hope that helps you. Now there's another question. Did I miss anything? No, I didn't. So the big question here is, let me just run a couple of things that I want you to do. Let me just see. I'll get out of that if you don't mind. I just need to look across here to get to, there it is. Questions. I'm getting backwards. GBP USD. GBP USD. Now, because of the Fed and because of Great British Pound, USD, United States dollar. Currency pair. This is the one. Remember I said last week, you will not know what's in store for the relationship between the British pound, how can I put it? Between the currencies, especially regarding the British pound and the US dollar, because we have to see how or if or when it tests the left side low of August, the week of the 7th. How can that be? I mean, July, the week of the 8th. Oh, I read that wrong. I read that in the old English tradition. 1.27912. And if it takes that out and it doesn't close below it, that says it can bounce to 1.33 and make an arch formation that goes to an M formation, lowercase m. If it doesn't even get there, it says it could have a really good bounce to 1.35 over the coming 2 months. If it closes underneath and it doesn't go above, doesn't close above 1.27912 in 2 weeks, it's in real trouble. Basil Chapman, I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Just checking for questions. Yeah, a couple of questions came up. Very interesting. Let me get to, okay, the crude oil. I think I did crude oil. But anyway, PBR in the den. That was a question from Jane J. It's at $9.09, up 36 cents. That's a big move, up 4%. Whoa. I've got this as a potential F/C. Technicals are improving, and I wouldn't be surprised if it, over a period of the next 2 weeks, it could retest the high of June of 2015 at 972. I like it. It's in leg E up in the weekly, leg B in the monthly, which is been there before. This is the first time the technicals are suggesting it could go a little higher. Before it failed at a B minus, then another B minus, another B minus, then A minus, A minus, A minus, A minus. And this is the first B it's had in quite a while. So this is Petróleo, Brasileiro, SA, and ADS. Oh, weren't those games amazing? I haven't been able to watch all that much. Just been busy with the webinar, but I've had it on kind of in the background every now and again. I just got in time for the young South African who won the 400 meters. That was incredible. What a beautiful run. I was a South African sprinter, not for the Olympic Games, although I had good times for my province as a kid. And I loved watching that. And then there was something else I wanted to mention. Oh yeah, and his coach, a 72-year-old coach. This lady, she did a fantastic job. I mean, I love this style. I love this style of pacing. His arms did some funny things, but if you break records and you're doing something a little funny, who's to say? Maybe that's the new move. All I can say, it was fantastic to see. And some of the gymnasts, how they do. Just as I talk about the coda, I'll be talking tonight about the coda that I think we're in, this final phase of a really massive move to the upside in the markets, in many things, not just the markets. And so in the gymnastics, these guys do these things, and these women, and then just as they land, you think, wow, that is amazing. It's like they take off and they do another thing, like the coda section. How do they do that? It's just beautiful to see. I mean, it's just a work of art. I love that. All right, well, PBR. So I'm looking, and what I said was, yes, it looks very good. PBR could have resistance in the 970s area, support at the 8.63 level. That's the 9-period exponential moving average. And it has big percentage moves in the intraday now. It's almost like a day trading stock. So far it's acting very well. MACD's just crossing positive, and the stochastics is 79%. I think it's getting just to a point where it could start to pull back a little bit. Okay, Now, let me see. I'd like to do this. I know I'll be getting a couple of late emails and questions, so I'm going to do this for right now. In the webinar that I'm going to be doing tomorrow night, I'm pretty much done. I just have to put in a couple more charts. I've got everything. They've got them titled, got everything. But what I really wanted to do was to say, within the context of the markets, what we're seeing now, I know that you hear this all the time. We've never had candidates, blah, 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 blah. There have been candidates. We've never heard such antagonism to it. Blah, blah, blah. I've heard that all that stuff before. There are two things that I'll talk about tonight, and I'll only talk about it if I feel very comfortable, because I do not talk politics when I talk candidates. I talk about the politics of politics. I try my best to relate it to the market. Sometimes it's just not possible at that point to actually relate what I want you to do to the market. I'll relate it to the socioeconomic conditions, the climates. So that's something that might be there. I've got a little section there to see if I feel like doing it or not. I'll only do it if I've been able to think coherently through the day, to get my thoughts to a point where I'm articulating in a technical way what I'm hearing and seeing. I'm only going to do it if I'm doing it in such a way that I feel that what I'm imparting to you in this webinar, when I look back at, or you at the end of your 30 days of playing it over and over, whatever a number of times you want, will what I say still have coherence and still clarity, and will it still be relevant? It's got to have relevance. Everything I do tomorrow night, I want to have it pertain to the relevance of what you can do to make money. That's the whole thing. So if I do talk politics tomorrow, it's going to be about the politics of politics. It's going to be where I think that each candidate is in my waveform. Remember, I said that I believe that Trump was in D and had made a peak D a couple of weeks ago. I think it's still there. D's where other things can happen. Usually there are negative things if they don't immediately reverse to the upside. So I'm going to be talking about that in my waveform. It's got nothing to do with who you can vote for. You can vote, you can do whatever you want. I'm just doing it as I had back in 2007, I think it was, when I said the next president will be Barack Obama, and I think he'll be a one-term president if the economy fails. And then before the election, the re-election, I said, I'm wrong, because if the Dow holds 12,000, this president will be re-elected, number one. And number two, the politics of politics is such that the media would never go against this president because of who he is, why he is, and what he's doing. They just won't do that. And I think that that was a correct analysis. And now we're going to be looking at something else. So will the relationship of the first black president and then the first woman president, is that in play? Doesn't matter who it is. It's the first black and the first woman, because those are the things that historically have been the glass ceiling that, as we've seen, can be broken. So I'll be talking about that, and then I'll be talking about the relationship to the market, okay? If I decide that I'm actually going to do it then and not use one of these forums here to talk about it. Okay, let's get back to the market. And the reason why it really is important, because of this code of phase. And I'm going to try to relate the code of phase to certain things that have happened in other periods that have some similarity. Okay, let's get on with the story. I want to just quickly look, Amazon's in leg E, peak E, a leg F in the weekly. That could have recycled because it's just so powerful, but I'm calling it F for now, and a leg E. So a stock like an Amazon could in fact have a sudden pullback. But wait a minute, isn't this the period where all the orders come in for the holiday season? Absolutely, except it comes in to manufacturers. Amazon's not a manufacturer, it is just a deliverer of goods. So Amazon, in fact, could have a pretty nice figures. That does, I completely forgot about it. Oops. That implies that Amazon could, in fact, have a breather and then be a participant. See, I want you to know what are the likely participants if there's another big move to the upside. And I think that you cannot rule out Amazon because it is just right there. This is an era of convenience. What is Amazon? It is a hub of convenience. Anything that you want, just about, you can get through Amazon with the click of a button. This is the age we're in. I'll be talking about that tomorrow night. Hey, I'll be back. Basil Chapman, Tiger Technicians out. Down. Gave back a full 5 points. It's 7 down. It's up 78. It's at 876. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or Swim. Next on TFNN.
Folks, you've got Thinkorswim coming up, and let's just do a couple of things here. So I had a couple of questions. Let me just deal with them one at a time because it's important here. The XAL. Oh, I didn't mean to do that. Oh, I'm doing so many things today incorrectly because I'm been up since very early. The NQs, that's what we're going to go to. Good question. The NQs right now, Ben in Tallahassee. There you are. Hi, how are you?
Great, perfect timing, actually. I'll make this quick because I know it's your last session. So I'm looking, if we're in leg B on the Qs in the monthly, and I'm looking to more or less buy and hold this last C and D, where do you think could be a good area to start nibbling at the Qs again?
So let's go straight to the Qs. I have the NQ up, and we're going to go to the Qs. Qs is an alternate count, and today it made the D. But it has had a straight-up move. This kind of straight-up move in the daily chart says that you should start to have a pullback, and this would be within about 3 bars. That's within 3 days. We should start to see the 116.50 or lower area start to be in play. So let me do this. if you were to look for a move down, you're going to have two places, because as of this moment, my thinking, and it's only my thinking, is that it's going to be sharp and severe and fairly short. There's a second part to that that says we have a little bit of a pullback, then we rally further, and then we have a 6-week timeout. So either way, the entry point for you would be about the same, I think, and I'd have 2 entry points. And the QQQ series, I'd be putting in bids. First of all, I'd throw in an outlier. I'd put in a bid at, because it did that in August. It went down to 84.74. I don't know how it did it or why. So I just have an outlier, and I'd say with no stop, it's at 117 now. I'd put a bid in at about 107 to 105. Just, you put a bid in, and you say, okay, it doesn't matter. If I don't get it, I don't get it. But anything can happen in the environment we're coming up into, okay? The other is just a more sane thing that says, hey, on the chart pattern, the weekly chart says 114.10 to 112.10, somewhere in that area.
Yeah, that's exactly where I was thinking. Is the 9 EMA on the weekly looks a bit like right around 112, correct?
Well, 112.80 is one, but I've got actually the 9-period exponential moving average on the weekly is 113.99. I have another one, the 200 simple moving average, which is at 112.80.
Okay, great.
So that's kind of the area where I would say, you know what, my risk would be 3%, maybe 4%. If this is going to be a normal type of situation, my reward could be that I'm in for the next ride to the upside. That's, of course, if I'm correct about the next big move up.
Oh, okay. So you're still debating possibly on the monthly that it may not be a B, or it could be a G or something?
I have no other way of counting it right now. It's either an alternate count B or an alternate count B. See, that peak E that was made in December came from the August low. So that could be the start of a new move. That could be that. In fact, I probably should call that A, but I don't want to. And then if that's A, then the lower high bar of the April 111.44 area is also, it's a gray A. So either way, we're in an overlapping B. I really feel very, very strongly that I have no choice in all my analysis to say monthly charts have broken out, and I have to stick with them as being positive.
Okay, great. I was looking at the 9 EMA and the monthly at around 110, and then the weekly 112, 113, like you said. So
yeah,
good.
I'm with you.
Awesome.
Okay,
Thanks a lot,
well, good luck with that. Let me know how it goes. So, folks, Basil Chapman, don't forget, tomorrow night we've got the webinar coming up. I was going to look at the XAL. Nice move up, but it's within the context of just having a bounce right now. That's what I'm thinking, the XAL. So, I'll be back tomorrow, but please check out the front page of TFNN. Go to my webpage and look for my webinar coming up tomorrow night for subscribers. Hope you can join us. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.